Cool.
Well, welcome and good morning, everybody. Derick Van Ness here from Big Life Financial, and I am excited about what we're going to be talking about today because what we're going to discuss could literally change the trajectory of your financial life, and it's not that hard. So, these new changes with the big, beautiful bill, no matter how you feel about it, this is going to be the law from here moving forward. And so, we want to set you up to take full advantage of every opportunity with this. And I'm joined here with my business partner and our tax pro with our accounting firm, Brecken Bunnell. Brecken, good morning. Happy to have you here.
Thanks for having me, Derek.
Yeah, yeah. So it's pretty early in the morning here on the West Coast where I'm at. So still waking up and getting going here, but got to tell you guys, this is such an important topic that it's not hard to kind of get up for. And I really want to frame this up for you guys. If you've never really thought about taxes and what the opportunity is here to get this figured out, I want you to rethink this for a minute. Every single dollar you can save in taxes is the same as a new dollar you made in your business, but you don't need more employees, you don't need more equipment, you don't have to take on more risk, there's not more complexity, there's just pure profit. If we can help you to come in and understand not only these changes in the tax code, but if you've got a tax pro or if you need help with this, but if you find the right people who can help set this up for you, they can uncover a ton of money that you've been sending to Uncle Sam that you don't have to. And I'm not talking about gray area, mysterious stuff. You know, Brecken's my guy who vets all this stuff and makes sure that everything that we ever talk about is above board, is legit, is in the black. And a lot of times the difference between gray area and in the black is your intention, how you document, how you go about doing these things. A lot of stuff you're already doing or could already take advantage of. You just need to know about it and do it properly. So I'm really excited about this. And just to give you a sense, our typical client before the tax bill, and this is, I believe, is only going to get bigger now that there's new opportunities. But before the tax bill, you know, we do hundreds of tax reviews every single year for clients to see what have they been missing. And it's very common to find between 15,000 on the low end, maybe 65,000. That range is really common. And then we have clients who are in the multiple hundreds of thousands of tax savings. But if we look at 15 to 65, and let's say we just go $20,000 a year, let's say because of this or having the right team or asking the right questions, you save an additional $20,000 a year in taxes. Over the next 30 years, if you were to take that money and you were to save it as you go, you would save about $600,000. But in that 30-year period, that would have turned into over $2 million additional money that you would have for retirement or legacy or to pass on to your kids or do what you want. It's a ton of money. And most of our clients would be way in excess of that. You know, I mean, Brecken, you see the tax reviews and you know a lot of people are getting a lot more than $20,000 a year. But I just want people to get the sense that this is money you can save every single year. It goes straight to the bottom line. And if you do what we think is a good idea and you put it to work so that you can build wealth outside your business, not just inside the business, you're going to really set yourself up for success. So having said that, I'm excited because I truly believe for almost everybody watching here, this conversation is going to be worth $10,000 to $40,000 a year, maybe more for some of you. It's really going to be that valuable. So can't wait to dive into it. So just so you guys know, I am not a CPA or a tax professional. I'm a part owner in our tax firm Navigator. And I want to be super clear. What we're about to discuss, we're going to be breaking down things that could apply to you. This is not tax advice. Brecken is licensed to give tax advice, but we don't know your situation. We'll give you an opportunity at the end to get a tax review or to find out what's on the table for you. But I want you to know that we're going to show you guys what's possible. And then from there, you really do need to talk to a tax professional to see how it applies to your situation because we don't know your situation, right? And Brecken here, he is the lead and runs our, like I said, our tax firm, Navigator Business Solutions. And the guy's just an ace. He's awesome. I looked for 7 years to find a partner who I felt was the right kind of person who understood tax code, was willing to learn new things, had the background and the business chops to be able to help people. So I'm really excited that I found Brecken, and he has done an absolutely incredible job growing this business and helping so many clients. Already hundreds of clients in the last couple of years. So really excited to have you here, Brecken, and can't wait for you to break this down. So I'm going to pass the slides over to you, and you can kind of take it from here. Give us your thoughts on the new tax bill and break down the stuff that really applies to small business owners, because obviously we're not going to tackle the whole thing today, right?
Mm-hmm. Yeah, I mean, thank you for teeing this up. Appreciate the kind words, Derick, as always. It's been a lot of fun getting to work with you and all of our mutual clients. I've already started to see how we have a pretty major impact that we're making on people's lives, right? Creating new opportunities and things that they thought they were just going to miss out on, or had to figure out how to do it and didn't realize the tax code really was there to help them with their goals and what they're trying to do versus just be a hindrance, right? Like a lot of accountants and other CPAs or tax professionals treat taxes, they treat it like an obstacle to overcome versus something that we can help clients navigate, right? Unintended, but in order to make sure that they're getting these opportunities. So one of the biggest ways that we're able to do that is by constantly staying in front of our clients, right? Coming up with new innovative techniques, staying on top of the latest updates in tax code, things like that. So obviously, one of the big things that everyone's talking about in the news right now, obviously this one big, beautiful bill act was passed leading up to July 4th, which I'll be honest, I'm surprised that they were able to get it done that quickly. I was very commonly saying I didn't think it was going to happen, but yeah, we were able to go ahead and get that done. And so today we're just going to kind of talk about some of the big highlights of what happened with it and also some of the ramifications from that bill as well. So we're going to kind of get started off with one of the ones that people got familiar with, accustomed to after the initial passing of the 2017 Tax Cut and Jobs Act. So what that was is that you're pretty common. People have heard the old adage of go buy equipment, you can write it off, right? Well, what they don't know is what is some of the terminology around that. So what happened is that in the 2017 Tax Cut and Jobs Act, which was just restored under the One Big Beautiful Bill Act, was the allowance of 100% equipment or asset write-off in the year of purchase, right? One thing that's kind of cool with that is that cash flow wise, you do not have to have all the cash up front paying for the equipment in order to utilize this strategy, right? So that's one thing where you're able to leverage a pretty significant write-off for your business without having to have the full cash investment into it.
So let's break that down for just a sec. Let's say someone's buying something that's a $200,000 piece of equipment, right? And they go in and let's say they put 20% down, right? So they paid $40,000 for a $200,000 piece of equipment. Tell me how that works for a client if this was qualifying equipment, because I realize it has to be the right type of thing.
Yeah, the biggest restriction on that is it has to have what the IRS determines as a useful life of 20 years or less, right? So that basically just means that most likely the true value of the equipment will be fully depreciated or written off under a 20-year window, right? So to use your example, right, if someone puts 20% down or $40,000 on a $200,000 piece of equipment, potentially some tenant improvements to the building that they're occupying, something like that, they are able to now write off 100%. So they can write off the full $200,000 worth of asset purchases in the given year, right? And we're going to assume, for the purpose of this discussion, let's say that they're in an income tax state, right, where between the state and federal income taxes on top earned dollars could be about 40%, right? Here in California right now, as you kind of mentioned, or on the West Coast, you're also dealing with higher income tax states, right, in that state. So that being said, I've also seen it potentially get up to even 50% of income. But to go back to that and wind it back, at 40% of a tax write-off at $200,000, you could be saving $80,000 on income taxes in the year of purchase even though you've only taken 40,000 out of pocket to fund that equipment, right? So that's kind of a cool thing that we can do. Obviously, you need to be a little careful of that, because that doesn't mean the payment doesn't go away, right? You still have that payment for however long you signed up for. So you need to make sure that cash flow wise that you're ready for that, and realizing that that money out the door at a later date, that's not going to be tax deductible, right? But we could still leverage that to be huge tax savings this year, and potentially that gives you that opportunity or the options on later dates of what you want to do for further tax strategy in a later year, right? And one thing with bonus depreciation that's kind of exciting is, even though this is kind of like the big headlines of what's happening, is this really dovetails off of some of the other strategies that we're working with clients, right? To really transform the tax landscape for them, right? So I'm going to pick on a client of mine that last year they did something that they call cost segregation, right? Which just basically means that they're breaking down the components of a building that they own from a traditional 39-year life, right? Just meaning I go and buy a commercial building, I occupy it and rent it from myself. I have to write that cost of that building off over 39 years under traditional depreciation methods, right? Well, you can see that's a big write-off over time.
Mm-hmm.
What cost segregation gives us the opportunity to do is to break that 39-year class life into smaller components, right? Or that building into smaller components. So we commonly will see 5, 7, I don't have 15 fingers, I put up 15, 15 and 39-year class lives. Okay. So what does that mean? Because we're able to break those down into smaller class life below that 20-year limit, right, on the bonus depreciation earlier, we're now able to fully depreciate elements of the business in the year of purchase, right, or the building. So in this example, this client in the Midwest, right, we were able to take the tax obligation that they were looking at previously of $20,000, and we were able to get over $20,000 worth of refunds for them after completing a cost segregation study for them for the year. So right there, you can see again in real numbers for an actual client we're working with, where bonus depreciation and cost segregation was able to help a client save $40,000 worth of income tax in 1 year.
So in a quick summary here, Brecken, tell me, who does this apply to? What types of things, if people are listening going, okay, is this going to apply to me? It sounds like real estate purchases, large equipment purchases, anything else that they should be thinking about where this might come into play?
Bonus depreciation is really any sort of tangible personal property you own or real property, right? And what that really just means is it's like your vehicles, trailers, trucks, computer equipment, like the hardware, right? Not necessarily software, because that's an intangible asset.
Mm-hmm.
Other things like, other types of equipment that you can buy that are going to benefit the office, just heavy machinery, anything that's going to have a lifespan of less than 20 years, right? So there's a lot of different things that fall in that category, right? Industry specific things. We deal with a lot of medical professionals, medical equipment they're buying for their office, for chiropractors, decompression tables, dentists, chairs, hand tools, things like that they're able to completely write off the cost up front, potentially even x-rays, all that type of stuff.
Very good. Awesome. So that piece alone can be worth tens of thousands or more for anybody if it applies to them, right? So this is a huge win for business owners, because this was made permanent, whereas before it was getting phased out, right? Now now this has become a permanent part of the tax code. So great. I love it.
Yeah. And kind of we've talked a lot about, and I alluded to as part of that, the 2017 Tax Cut and Jobs Act, right? That was the first landmark tax revision bill under the first Trump administration, right? That introduced a lot of the things that we're talking about. And what the One Big Beautiful Bill really did is it just kept that, because what it was originally is that they had a lot of sunsetting provisions, and it was temporary tax relief, right? So these slash tax rates, lower tax brackets, all these things, they were set to expire at the end of this year, right? So that's why partially the Trump administration and current version of Congress, right, they were very adamant about trying to get this done because it was set to revert back to the original rules, right? So that could have, for a lot of our clients, that would have been probably tens of, if not hundreds of thousands of dollars in additional taxes if they had not got this done. So the good thing about this, if you love it or hate it, from my perspective, the good thing about this is that these cuts have now been made permanent. So this is now just the law, right? Most of the provisions from that earlier Tax Cut and Jobs Act are now permanent. Some things got tweaked, right? Some things were lifted, some were lowered. But for the most part, a lot of the Tax Cut and Jobs Act is still, it's the same code we've been dealing with for years, is the way I like to put it, right? And that really, to me, kind of highlights how important it is to understand and work with a professional that looks to navigate the code, not just the new, I call them the new sexy things, right, that you hear about and what everyone wants to talk about, but the things that have been in the code since the 80s, the 90s, the 2000s, right? There's a lot of strategies out there that didn't change, right? They were available last year, they were available 10 years ago, and they're available now, right? One of these strategies that I want to talk about with another mutual client of ours was able to take over $1 million worth of funds in retirement accounts that would have been taxed on disbursement. And we were able to roll all of those over into a Roth IRA, okay? And through a tax strategy that allowed us to essentially bypass the tax for the current year, defer it out, at least for 15 years, okay? But we were able to take a significant portion of his retirement funds and move it from, going to be taxed when he needed to use it most in retirement. And we were able to completely shift it off the books and make it into a friendly tax environment where now in a Roth, he can live on all that money tax-free for the rest of his life. So that was cool. Yeah. That was one. And like I said, there's other strategies that we've discussed that are part of the, that we work with clients on that have been since the 86 version of the code, right? The bedrock that we've been dealing with for this entire time. The OBBA, 2017 Tax Cut and Jobs Act, all that's doing is modifying the Internal Revenue Code of 1986. We're still dealing with the same law since then. And most of the strategies that we help clients with have been part of the code since then, right? So it's really important to show how like these little things, and like I mentioned, the big shiny things that happen now, they're fantastic, and we want to make sure we're watching them because they can make a major impact. But it really starts with the things that have been in the code for, over almost 40 years now.
Okay? Awesome. Well, let's dig into some more of these new and sexy things.
Perfect. So one of the things that apply to a lot of our, folks that we're dealing with is there has been an increase in the child tax credit, right? Nothing too crazy. It went up from $2,000 to $2,200, right? So for some of our families that, got 3, 4, 5 kids, they've got more and more in tax savings coming their way, right? On the federal side. Is it super crazy? No. This is actually a temporary provision for now. It's set to revert back to the $2,000 limit in a couple of years. So this is something to look to take advantage of for now. But this is something that just recently happened, that the child tax credit is expanded, right? There's other opportunities to utilize children as part of your tax strategy and things like that, right? Trying to help put them in a position that, it's very common that working with a lot of the entrepreneurs we work with, they want to set up their kids for later in life, right? And that they're able to help use their business or other assets to help fund that, right? So setting up things for like their college savings, down payment for a first house, I've got a daughter that's turning 1 tomorrow, right? So I've already started working slowly on how am I going to work to pay for her college someday? How am I going to pay for this? Things like that, right? So this was great news for me, right? It was only an extra $200, but that's $200 less that Uncle Sam's going to get now. But that makes him pretty, that helps. And on top of this strategy, doing other things with the kids as part of a larger business and tax plan, it can help kind of facilitate some of these other goals that you have for how you want to work with your kids and how you want to set them up for later in life.
Awesome. I love it.
Another thing is that, it was kind of flashy. You heard a couple things when they talked about this, right? I'll be honest with you. There's a little bit of political hand waving going on, right? With this.
There always is for everything. Yeah.
Crazy, right? One of the big things that was touted for a long time is no tax on Social Security, right? I'll be honest, the way that they frame that and the way that it's actually being executed probably works for most people in retirement, right? Probably not a lot of the clientele we're working with, but I'll still explain anyways, okay? So what happened was the senior tax relief is they expanded the standard deduction for seniors by about $6,000 per senior, okay? So this was designed to eliminate tax on Social Security benefit just because of the fact that the standard write-off that you're going to get just for existing and breathing in the United States, right, was expanded for seniors, those over the age of 65, right? Mm-hmm. So the way that Social Security tax is generally taxed is that you are taxed on portions of it as your income grows. So for those that are heavily reliant on Social Security for retirement purposes, or have maybe a little bit in the form of non-Social Security, retirement, they're going to be the ones that primarily benefit from this, right? Because they're not going to have the expanded tax. They're not going to run into a lot of these tax issues, right? So that's one of the big things that happened with the senior tax relief. And another one was no taxes on overtime, right? I've actually had a couple clients reach out to me about this. The way that that's done is actually a little different, right? The way that they marketed it, the clients have reached out asking, does that mean we no longer withhold payroll taxes on their OT wages or anything like that? It's actually not the case. What actually happens is that people on their individual tax returns are now entitled to a adjustment, or what we used to call above the line deductions, reducing their taxable income by the amount of overtime wages they received. So doesn't technically directly go towards employers right now, but their staff, if they are getting OT wages, potentially can get some tax relief on OT wages.
So let me just talk about that as a layperson. So as a business owner, if I have people who are working overtime, I pay them and tax them the same way. And then at the end of the year, they get to go back and say, hey, $15,000 of what I earned this year was overtime, so I don't have to pay taxes, and they'll get a refund for that.
Yeah, it's a preset amount. There's a cap on it. I can't remember it off the top of my head. It's either 12.5 or 50. Okay.
Yeah.
So it's that cap that they will be allowed to deduct OT wages up to that cap for the year. But yes,
yeah, I'm pretty sure it's $25,000 on that, and also the tips I think is $25,000 as well. No tax on tips. Yeah, so the government's not allowing people who make millions of dollars to, call all of it overtime and not pay taxes. This is really designed to help people who, are, W-2, working hard, and need a little bit of a tax break on some of that income.
100%. That's exactly what it is. Yep.
Okay.
So this is one that's kind of a hot button item, right? For a lot of folks, especially in high income tax states, high property tax states. This is one that a lot of people, when I had to explain to them what some of the SALT or state and local tax SALT limit caps were, would get a little frustrated with me because, and it was understandable, right? So what happened was, as part of the 2017 Tax Cut and Jobs Act, they introduced an artificial limit on how much you were allowed as a taxpayer to deduct against your federal income tax on your personal tax return, right, for state and local tax deductions, okay? That limit was $10,000, right? For a lot of our taxpayers, they quickly outpace that between the property taxes they pay for their homes, right, and the income tax they pay to the state. So if you were above that $10,000 limit, for the most part, the answer for a lot of folks was sorry, right? Now, what happened is that they introduced through 2028 that the limit has now been raised to $40,000 that you can claim on your personal tax return for state and local tax deductions if your income is below $500,000 for a married couple. Okay. It does begin to phase out to the $10,000 limit afterwards. So this is something that you're going to want to work with your tax professional and try and figure out ways to try and get below that limit so that you can fully maximize how much you're able to deduct on SALT tax deduction limits on your personal return. Okay. Now, one thing I want to highlight with this is that what a lot of people don't realize, and their accountants either were poor communicators on how to take advantage of this strategy or simply didn't know about it, in my experience, right, is that there was a guaranteed workaround for most of the states in the country, right? So what that workaround is what we commonly refer to as pass-through entity, flow-through entity, PTE, SALT write-offs, all the same thing, really just with a bunch of different names, okay? So what that strategy is designed to do is to have the business pay income taxes at the business level on its own profits, right? Most of our clients that are small business owners are used to paying income taxes on their personal tax returns for their business's profits, right? Mm-hmm. So by taking advantage of this strategy, we're flipping that where we're now at the state level paying income taxes to the state at the business level, right? The way that most of these states take advantage of this or utilize this is that they allow you to take a credit on your personal tax return for whatever tax you pay at the business level. Okay.
So if I pay my state taxes out of my business, it becomes a write-off. So my income's lower and I pay less federal taxes on that because my income's lower.
Correct. And you still get to claim the state income tax and state and local tax write-off on your personal return as well. So there's not a lot of strategies where you can kind of, have a double take or double dip on it. This is one of those where you're kind of allowed to do that, right? So what happens is on this is when I talk to clients about this really commonly, if your state allows for this, right, this is a way for you to essentially write off the estimated tax payments you're paying to the state through your business. Yep. So it's a pretty cool provision. It's actually been around for several years now, right? So a lot of clients are in states that don't even realize that this is a thing, right?
Yeah.
Off the top of my head, I'm in the state of Utah. Utah allows this. North Carolina, South Carolina, Georgia. It's over 30 states right now actively, right? If I listed them all, we'd be here forever. So that being said, there's a lot of times where this is a write-off that you could be taking advantage of that a lot of times accountants either don't know how to fully execute, do a poor job of communicating, or and I have seen this before, that they just kind of do it and don't actually educate their clients on what's happening, right? Which is good that they're helping them with the strategy, but also they're not helping educate them on the opportunities available, right? So that's one thing that we like to highlight as part of our planning and things, is that we educate you on what the opportunity is, and then obviously help you fulfill the strategy.
Yeah, I think that's a huge point, Brecken, because something that at Big Life Financial that we're passionate about, and I know you are at Navigator as well, is this idea of empowering you as a business owner. Like, you don't need to be a tax expert, but in a perfect world, I'd like to be able to say, why did you do this? And you have an answer for that, instead of because my CPA said so, right? I find that where people get in trouble, or where a lot of things get missed, is you're so blind and unaware of what's going on that you totally miss things, or you don't know to tell your CPA, hey, we did this thing, we bought this building this year, and they missed the whole thing, and you miss all these tax breaks, and you're the one that pays the price for their ignorance, right? And so we need to help you as much as possible to be aware and utilize a tax professional properly, right? So you got to know enough to work with your tax pro. You don't have to know everything, but it is really important that you're aware of what's going on. Plus, I'm going to be honest with you, so many people I know are afraid of taxes because they don't understand this stuff. That's part of why we're doing this, is so that you know at least this much more, And you can sleep better at night knowing, hey, I sort of understand why I'm doing this and what's going on here. We really like to get clients to the point where they know exactly how much money they're making. They know exactly what they're going to owe in taxes. We can plan for that, reduce the taxes, but they know every step of the way. They don't have to have six figures sitting in the bank hoping and praying that April 15th, their CPA or tax pro doesn't come to them and say, hey, you got to write a check for all of it. Right? I can't tell you how many stories, Brecken, that I've heard where people are like, yeah, we had to sit on hundreds of thousands of dollars until October because we didn't know how much we were going to have to pay. And it was like this big, scary mystery. And the problem with that is A, it's eating up a ton of your emotional bandwidth. B, all that money's stuck. You can't use it. You can't grow your business. You can't invest it. You can't do all these things. It's just sitting there. So to your point, us educating you, part of the reason we're doing this is to give you that high level understanding of some of the changes here, but really having a tax pro or a tax team that helps you understand this stuff, super, super important. It'll help you be such a better business owner, probably a better parent and spouse, brother and sister, because you won't be so stressed out. But knowing what's going on is super, super powerful. So, that's something I really appreciate about you, Brecken. I know you're passionate about helping people to understand what's going on rather than you just filling out the forms and doing it for them.
I joke and say I think in a past life I probably was a teacher, right? Because I do really enjoy this piece. So, and you and I have had private conversations about this and kind of why we're doing this. And really, it's designed that all of these strategies are designed, and the way we like to do it is to put our clients back in the driver's seat, right? And you would have, the clients we're working with, they wouldn't have become entrepreneurs if they weren't ready to just, go out and take life by the horns and go after it, right? So obviously it's pretty frustrating for someone like that wants to be proactive and get things done and all these things, to work with someone that's, yeah, we'll talk about it later and things like that. So yeah, this just really highlights where the approach that we like to give is, again, trying to give our clients back the power when it comes to taxes versus just simply reacting and sitting on hundreds of thousands of dollars. Right?
Absolutely. So that's a big one.
So here's one that it's highly niche. I'll kind of quickly touch on this. I don't think this is one that's pretty restrictive, right? But it really highlights, again, where working with a planner to forecast out and think very long term is so important from a tax perspective, right? So one strategy out there is what they refer to as qualified small business stock, QSBS, or 1202 stock, right? What this means is that if you have a business that is structured as what's called a C corporation, right? I always pick on your Walmarts, Apples, Target, things like that. They are C corporations. They are separate tax-paying entities that truly exist beyond the owners themselves, right? It's its own tax-paying entity. What a C corporation has is that it has some pretty cool benefits from a structure, right, that you can take advantage of if it applies, right? So one of these, this QSBS stock, is that depending on how you're structured and how long you've owned your business, and it's got to be at least 5 years, you're allowed to actually be able to sell your business after the 5-year window and exclude 100% of the gain, right? I don't know about you, but to be able to say that I sold my business and didn't pay any income tax federally on it, at least, right? That'd be pretty cool, right? To keep that 20+% that you would have paid in long-term capital gains at minimum, right, to the IRS, to keep that back in your pocket. Talk about a major driver, right? Now, I mentioned there are restrictions on this strategy, right? But it doesn't apply to everyone, right? So this is one of those that you have to make sure that you belong in a type of business or industry. Commonly, we see this a lot of like your construction trades or qualify, tech startups, other types of businesses. We'd have to go through and assess your exact situation to determine if it qualifies or not, right? But this is one of those that structurally, if you get it right from the beginning, it can qualify, right?
Right.
But it also highlights, right? What I talk about is beware of the cookie cutters in a way, right? And when I say that from a tax perspective, is a lot of folks get hook, line, and sinker on certain strategies. This is the type of entity structure you need, and then they're done, right? They never look at expanding your horizon beyond the trustee S corp, right? So that being said, it highlights the advantage of introducing new entity structures, reforming and reorganizing the way that you're taxed, and doing different things that apply, right? If you do this right and you think 5, 10, 15 years from now, right, and start making tax plans for that today, as far off as it seems, right, you blink and it seems like it's here, right? So that being said, it really highlights that great tax planning really starts today, even 10 years from now.
Right. Think of it like this, Brecken. I think a lot of people think taxes year to year, right? But you wouldn't build your business year to year. If you did, buying that piece of equipment this year, that building this year, it would look like a disaster, right? But when we're thinking 5, 10, 15 years in advance, now buying that piece of equipment that's going to last you for the next 10 years, buying that building that's going to be where you operate from for the next 30 years, like makes a huge difference, right? So we need to start thinking about taxes, not just year to year, which is very important, but multi-year strategies, long-term strategies. Taxes can be done like that, just like you do with investments, just like you do with your business. Taxes are the same way. It's just nobody's teaching this stuff. So it's very important. And this is one of those that, like you said, it applies to a small group of people, but the people it applies to, I mean, we're talking about potentially millions of dollars in tax savings. So it's there's a lot of these things that are very niche and complicated, but it highlights, like you said, the idea that if you've got the right team and you understand this stuff, it can be worth a lot of money. It's a total trajectory changer for where you end up.
Well, and kind of like I'm going to play off of something you just said, right? A lot of people think of taxes year to year, right?
Mm-hmm.
So sometimes people in the rash of, I don't want to pay taxes this year, sometimes will cut their nose off to spite their face a little bit, right?
Mm-hmm.
We run into that at time too. So by making sure that we don't lose sight of the long term, right? I grew up in an agricultural background. It's a big part of who I am. And I always grew up with folks that it's, when you're building fence, build it right, right? So because you don't want to come and do this crap again next year, right?
Mm-hmm.
So that's where, when we think about this and we try and think, hey, I'm going to put in more effort today so that I know it's going to pay off at a later date, right? We try and integrate that with our plans as well. So this is a really important part of what we do, is making sure that we plan long term, because it does affect some of our short term strategy as well. So
very good.
Cool. Here's one that was really exciting and we paid a lot of attention to, is the restoring of R&D cost immediate expensing, right? It's kind of a mouthful to read it that way, but I'm going to break that down and make a little bit more sense. So in 2022, Congress changed the law so that what happened was, on R&D related costs or expenditures, that cost was forced to be amortized over a 5 or 15-year window, depending on where the costs were incurred, right? So if it was US based, we could spread the cost over 5 years. If it was foreign, it'd be over 15, right? So potentially we're now taking expenses that before 2022 we were able to just write off right away, right? And now we were forced to spread them out over time, right? So that created a pretty big obstacle for a lot of our clients that have this type of activity, right? Of now we took on these costs, but we don't get to recognize them for years, right? So this was literally costing, in some of our clients, thousands of dollars, right? So this really kind of hamstrung or limited some of the obstacles that opportunities that they were able to take advantage of from an R&D credit standpoint, right? So this version of the One Big Beautiful Bill actually restored this to 2002 rules, right? So that was a really, really big win for small business owners, right? So there's a couple things of what they did on that, is that they're now allowing for immediate expensing of those costs again, which means that we can take all the expense and the credit, right? On top of it, another thing is that they also allow for retroactive relief of that. Okay.
Yep.
So let me kind of highlight what that looks like, right? So for businesses that are about less than $31 million in assets or revenue, okay,
Mm-hmm.
you can either retroactively go back and amend your tax returns and claim the expenses in a year as you're no longer required to amortize those costs, right? So potentially you can go back and immediately get some savings there, okay? Other options, if you have businesses over that, or if you don't want to go back and amend, because that process is, I'm not going to lie, it's pretty much a nightmare, which you know this, right? Unfortunately, we have clients waiting on checks for literally over a year before they're getting it because the IRS is so backlogged. But what can happen on these amortized costs is that you can actually just expense them all in the current year, right? So if you've done this in the past or you have these amortized R&D costs, we can either fully expense them in 2024 if you haven't filed quite yet, or you'll be able to fully recognize them in 2025 if you choose to forego the amendment process. Okay, so pretty dramatic tax relief that came up with that provision of the bill.
So let me summarize this from, once again, the layperson standpoint here, Brecken, now that you've gotten all technical for us.
Yeah.
The way I see it is this. In 2022, something came through that was part of the 2017 tax cuts, right? And essentially what it did is it kind of broke R&D credits. The research and development credits were still there, but in order to take them, you had to essentially, a lot of the dollars you used to create the credits, you couldn't write them off, right? You could only write off 20% a year. So what it did is, for a lot of people, it raised your taxes that you would owe by more than the credit, so you wouldn't want to do it. Well, Congress realized this was a problem. There was actually been 2 bills over the last couple of years trying to fix this, but they kind of got caught up in some of the politics of a lot of things and never passed. So what this does, you guys, is this allows you to go back and claim the last 3 years of R&D credits, 24, 23, and 22, retroactively get all that money back. Now, like Brecken said, the IRS is slow at processing this, right? So when we file these for people, yeah, it takes a year, but in most cases, we're talking about $10,000+ a year that you can get back. So we have lots of clients who have gotten $10, $20, $30, $40,000 a year per business, right? So we've done this for, I don't know, we've probably done thousands of these, definitely for hundreds of clients. I don't think we've done it for 1,000 clients yet, but we're getting close to where we did this 2017, 2018, 2019, 2020, 2021, and then the tax change happened. Now there's a huge opportunity for anybody watching this to go back and claim these credits. And the awesome part is, like, the process is pretty simple with someone who knows what they're doing. For us, it usually takes clients an hour or 2 worth of work, right? An interview, and then getting us some tax returns. We do a free assessment. To me, this is the biggest no-brainer, money in your pocket for the small business owner who qualifies. And honestly, most of our clients, so if you're here watching this, chances are really good you do qualify. If you're in medical, manufacturing, construction, automotive, anything that uses technology, which is 90% of things, to improve a product or process, you're probably doing it, right? You just don't realize it. So it's worth it to get a free estimate. But I really think if anybody could take action and just get one thing done from this new tax bill that can put money back in your pocket right away, it's the R&D tax credits. It's super easy. We can go back and get money you've already paid in taxes, so you'll be getting a check, plus the government will pay you interest. So to me, this is like such a home run, because it's found money, right? And then you take this money and you reinvest it in your business, or you put it to work. For a lot of people, even at $10,000 a year, this is 30 grand going in your pocket. And most of the businesses we work with, it's more than that. And if you have a big business, it could be a lot more than that, right? So it's pretty exciting. And this is one that I've been waiting for a long time, because it's something both sides of the aisle absolutely agree with. So it's just a matter of time. But it's a huge win for business owners. And a lot of our clients have been using this as an opportunity to, take a lot of money that would have gone to the government, and now they can put it toward their own retirement or expanding their business or whatever. So if your business is doing over, I would say, $500,000 of revenue, so top line money coming in, it's definitely a no-brainer to get this done. And we're going to give you an opportunity to do that in just a minute, as part of a tax review we're going to offer, but also a free research and development credit estimate, because we think this is the single most important thing any business owner can be doing right now, just because in 2 hours of time you could get 30, 40, $50,000 back. Where I come from, 15 or $20,000 an hour is a pretty good rate for your time. So we think it's pretty awesome. Yeah, and if for some reason you don't qualify, no loss. Maybe you spent an hour to know that, but I think it's worth finding out. So if you're here, you're going to want to hang on just a sec here and jump on and do that. Anything you want to add to that, Brecken?
Not necessarily. I think that realistically, it really highlights, the fact that there are a lot of opportunities out there that we can look to take advantage of by working with you, right? And just making sure that we're putting these things in front of you, right?
Mm-hmm.
Getting to know you and your situation, right? You'd probably be very surprised to realize how much of the activity or things you're already doing qualify for different types of tax write-offs, or things you're considering doing that you had no idea there was tax incentives or things. So as part of that, one of the things that we also offer with Navigator, and I want to highlight, is the fact that the folks at Big Life have really helped us with this, is that on top of the R&D estimates and things like that, we also offer a free 3-year look back on your reviews as well, to see if there are other opportunities as well that you can take advantage of that in your review seems like may or may not have been part of your strategy in the past, right? So that's something that we do, is that we give you it's the test drive before you have to buy, right? I can show you side by side, looking at your tax returns, if there's a way for our firm to potentially help you out, and if there was any potential tax savings opportunities that we can help you go back and get with things like R&D and the folks, and how we're working with Big Life on that, or if unfortunately that opportunity really is just lost. So it just really highlights the fact of, okay, now that we've seen this, we've got to get ahead of it, so you don't continue losing money you don't need to lose.
Right. So what I've seen is when we do these tax reviews, and Brecken's team goes through them, is we just help you figure out how much have you been overpaying taxes. If there's money there we can go back and get, we can help you do that, or you can go to your CPA and ideally have them do it. But ultimately, I think it's really important for you to know if you've been overpaying taxes. Most folks I talk to suspect they're overpaying taxes. They just don't know for sure. This is a way to find out for free. So all you need to do is scan the QR code, or if that doesn't work, down in the corner down here, there's a link. It's just biglifefinancial.com/BBB-tax-webinar. That'll take you to a place where you can set up a call with our team. They'll take you through, if you want an R&D estimate, they'll take you through that. If you want a tax review, they'll take you through that. I would suggest for most people you get both, because they're free and now you really know what's going on. But it is amazing to realize that you thought your people were doing a lot of things and they weren't. Or if you've not been getting proactive advice, I promise you're leaving money on the table. And a huge part of what we want to do here is make sure, whether it's with us or with anybody else, we want to make sure that you're not losing out on money. And you need a good tax team, because every time one of these changes happens, like the big beautiful bill or the Tax and Jobs Cuts Act, if you don't know what's happening, you're missing out on money. And we see it every single day as we do these tax reviews. 15, 20, 30, 50, $100,000+ a year that people are overpaying in taxes and they don't even know about it. You work too hard as a business owner for your money. You take risks, you hire employees, you buy equipment, you do all this stuff. Why not keep a lot more of the money that you make? And that's really what this was about, was highlighting the key things for you. Sure, there were changes, like the standard deduction went up a tiny bit, and there's a few other things out there, but these are the big changes for you that if you do these, this information is worth tens of thousands of dollars a year to you. And I can't express enough how important that is. So Even if you're not quite sure, uh, click the link, set up a time, talk to someone on our team. I think you'll be amazed at how much help you can get with this stuff. And even if you're not quite ready to take action, that's okay. I want you to know this information. We're willing to give a little bit of time to help you be more aware of what's possible, because ultimately our mission here is to help empower you as a business owner, help you get money out of the way so that you can live the life you're here to do, you're here to live, and make the contribution you're here to make. To me, that's so important. I think business owners are the backbone of our country. They're the leaders in their communities, and you guys make such a difference. This is one of our ways of giving back, is helping you to keep a lot more of the money you make. And I just can't express how important that is to us. So, grab an appointment, talk to someone on our team. Let's see how we can help you, whether it's with us or with someone else, because I really want to see you get results. I want to see you stop overpaying taxes because the people around you aren't necessarily aware or supporting you in the way that you need. So you just need to be aware of what's going on. Anything else you want to add there, Brecken, or should we wrap this thing up?
I mean, I'm never too upset if things wrap up a little early myself. I would just more than anything like to say thank you, Derick, as always, for being a great business partner. I think we're doing great things. I really appreciate you inviting me on today. I hope that this is the information we talked about and shared with everybody. They find value in it, and that we're able to help them get some money. Because it's better. In my personal opinion, I prefer to see it in my client's pocket versus Uncle Sam's. So,
Me
so thank
too.
you for having me on again today, Derick. Appreciate your time.
You got it. And everybody else out there watching, thanks for doing this. Make sure you don't miss out on this opportunity, because it could be a total game changer. Like I said, even $20,000 a year in tax savings pays for a lot of college, a bunch of cool vacations, or if you put it to work, over the course of 30 years, we're talking millions of dollars of extra money in your pocket that you can have for retirement, legacy, or to make a difference in the world. And that's really what we want to see for you. So thanks for taking a little time to listen. I know taxes isn't super exciting, but it is super important. And I appreciate you guys for being here. So we'll see you on the next webinar. Thanks.